What's going on, everybody? This is Jack with the Trading Tribe. Excited to bring some more trading content here for you today. Thanks for tuning in. Feel free to like and subscribe to the channel for a lot more videos like this. And hopefully, regardless of where you're at in the trading journey, this is really valuable. Today, we're actually going to be looking at an example that happened in the markets when I was trading that kind of illustrates one of the different strategies that I like to find in the markets and one that I'm typically trading quite a bit on a week-to-week basis. And it showed up actually in the natural gas market. So we're going to be looking at the natural gas future. So up here at the top left, this is the current front month for natural gas. I have other videos on the channel kind of explaining how futures trading works and some of the basics to futures trading. So definitely tune into those to get more acclimated with kind of what I trade on a daily basis. But at the end of the day, right, we were day trading natural gas today. And from a long-term perspective, we were thinking natural gas could have some sort of a correction or some sort of a pullback in the markets. And that's exactly what we got today. So I figured, why not look at bearish flag patterns and look at bearish breakouts and how we actually go about trading those in the markets. And if we look at today, kind of after the fact, it's a little bit easier to see the pattern, but we'll kind of talk through this pattern and talk through kind of how this pattern works and then different ways that we can actually trade it. But now let me just drop in a few levels that I liked on the day and then a trend line that I was also paying some attention to as well. And whenever we see this in the market, so first of all, we always want to give weight to that higher time frame type idea. So today in the markets, we were expecting a pullback, or we wouldn't be surprised, right, if we saw a pullback. And so on a market day, right, where it's going down and that aligns with that higher time frame, we always want to give weight to that as multiple time frames are allowing. We also have a video kind of in more detail going through that. But just to put it in perspective at kind of what we were expecting today, once we woke up, right, we woke up at about 6:30 Central Time. So the market was actually kind of in an uptrend at that moment, right? It was making higher lows and higher highs, higher lows and higher highs. But we'll notice right around 6 o'clock when it made this new high to about 7.3, it actually never made a higher high. So that uptrend that was kind of happening in that early session stopped, right? And we can tell that because it started making lower lows and lower highs, right? So it stopped showing this strength and it actually started going down, right? And making a lower high and going down again. And typically what we'll see for this, if we zoom in before the big drop, right, we want to watch a few things for bearish flags, right? And what a bearish flag is it's when there's kind of a consistent low. So if we notice, right, natural gas comes down here, jumps, comes down here, jumps, comes down here, jumps. So these are the two levels that I had kind of on my eye for kind of that low level. And then we'll notice, right, the highs were kind of descending. So it popped up to this level, popped up to this level, and that's what we call a bearish flag pattern, right? That flag is because, right, this descending level, so the highs are kind of descending, and then the lows are staying the same. So it's kind of creating a big wedge, if you will. And at some point, right, that wedge typically breaks. So it's kind of similar to a breakout, but there's a couple ways to actually trade it. So in this case, there wasn't enough confluence to get super aggressive up here, but for flag patterns, you can actually trade within the flag. So some people were shorting into this pop here, expecting for this major move. I don't love to do that because it's kind of a guessing game as to if this is an uptrend or if this is a bearish flag. I actually like to wait for confirmation. So we'll notice it comes back to that kind of initial flag level, and then it breaks through. It gets to our next big level we're watching, and it has a massive drop. And as a trader, right, this is what we get really interested in. So for bearish flags, if we think about it, right, it's making lower lows and it's making lower highs. So at some point, we expect this bearish flag or this wedge that we're seeing with all these levels to break. And when it breaks, right, there's usually a lot of momentum. So today, like we were talking about, long term, even, there kind of made sense to be some sort of a pullback or correction. So there was a ton of volume in this breakout right here. And usually with these wedges or these flags, once that breakout occurs, there's a lot of potential in that secondary move as well. So we'll notice it does that massive breakout, pulls back right to VWAP, right to our moving average, and right to that major level to the penny for kind of a short. And just to take this opportunity on this given day, if we do our drawing tool and we measure the ticks, right, this could have afforded us $2,500 per contract. So extremely lucrative. And in this case, it's also really important to know, right, this is a trade that immediately you're in the money as well. So if you're trading that bearish flag and you're trading the bearish flag breakout retest right here, right, you're taking advantage of that momentum after the sellers have already taken control. So it's a lot safer of a trade to take this for a flag pattern. That prior video going over kind of bullish flags, there's definitely a couple ways to trade those as well. So definitely make sure to tune into all of these to see kind of the difference. And with bearish flags, right, there's typically two types of opportunities, right? There's that opportunity within the flag here where you're shorting, hoping it does not make a higher high. So your stop loss is based on that prior pivot. And then your target is typically at that flag low level, right? So even this first trade here had a ton of potential as well, right? If we sold it in the middle of that level, that was 195 ticks. With the natural gas futures market, every tick is $10 equivalent. So that's a $1,900 trade in just about an hour. So both of these trades were extremely lucrative on this given day. This trade you had to think pretty quickly and have that idea kind of forming, and you had to react pretty quickly. Whereas this trade, right, you had a little bit more time because we knew kind of the momentum had shifted to sellers. And so that's why we wanted to attack the market by shorting. And again, right, another thing I really like about these bearish flags is they typically lead to a pretty quick trade as well. So immediately within even 10 minutes, right, you were already up about $500 as well. So trading a lot of these quick moving targets makes it a little bit easier because it is easier to stay patient with some of these trades finishing up so fast as well. So hopefully this helps today. Natural gas has quite a few bear flags kind of forming over time because, all of these major pops we've had this year result in a pretty heavy pullback as well. So on those given pullbacks within the market, there's always a ton of range here with these bear flags and the retests within the flags. And then within the stock market, right, we've really been dropping in the entire year for 2022 at least. So tons of bear flags forming over in that market as well. So regardless of what you're trading, hopefully this really helps, and stay tuned next time for more videos. Thanks everybody.